On today's episode, we are going to take a quick look at Twilio. They just reported earnings yesterday after the market closed, and today they closed about 17.5% down based on their earnings. Is this an overreaction? I think so, and I'm going to explain on today's episode. But go down to the comments and let me know what are your thoughts right now. While you're there, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas for you right now. Alright, so let's take a quick recap on their earnings. First, right off the bat, revenue was about $740 million, and that was up 65% year over year, and it was up about 15% quarter over quarter, so strong strength there. They also had about 250 million active customers right now. This is up roughly 10 million quarter over quarter and roughly about 38 million new customers year over year. So we also saw strong growth revenue. We saw strong growth in customers. What is happening? Why is the stock price down? At the end, they also gave us a quarter four outlook, which is expecting to be somewhere in revenue of 760 to 770 million. This is up. If they meet these expectations, this will be up about 39 to 40% year over year. So we can see Twilio is a beast when it comes to growth. But what are some of the highlights from their earnings? First, I want to say organic revenue is slowing down compared to previous quarters. And this is something impacting investors and something they're worried about. But one thing investors need to make sure that they understand is same time last year, we had elections. So they kind of impacted the amount of revenue they collected last year. So if we take a quick look at the slides here, we can see organic revenue trend. Right now, organic revenue is growing about 38% compared to same time last year, where last quarter it grew about 50%, and same time last year it actually grew about 48%. So a lot of investors are saying, hey, hold up, there's a bit of a slowdown here. This is something we don't like to see. Like I mentioned, same time last year, quarter three and quarter four were heavily impacted with some kind of growth due to elections and kind of extra kind of revenue coming from that segment that is kind of impacting quarter revenue growth in the organic revenue trend for this quarter and the upcoming quarter. And I think this is something that's misleading to investors. If we take a quick look, they mentioned for their quarter four, excluding the contribution from last year's, we can see political traffic. Quarter four revenue is actually expected to grow 45 to 47%. And here we were just taking a quick look at it, and we saw that, hey, with the quarter four outlook, it looks about 39 to 40%, but in organic revenue and not including political traffic, it would have been actually growing in the high 40%. So that's something to keep in mind. I do believe this is something kind of mixing up the signals with Twilio at the moment. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. Another thing we did see is the COO did resign. He's going to stay for a few more months, but then leaving. And the COO was loved by a lot of investors. He had a strong experience in this kind of market, and investors are sad to see him leave. Another thing that we're seeing is decline on non-GAAP gross margins. And they do mention that some of these gross margins did see a bit of a decrease due to acquisitions. And again, if we take a quick look at the company's presentation, here we can see that the company, if you see non-GAAP gross margins was about 54% on. But if we take a look at adjusted gross margins, they did lose a nice amount, about 3.1 percentage points due to acquisitions, and then 0.8 on another acquisition. So this is kind of affecting non-GAAP gross margins and has a bit of investors worried. But again, they do mention that in their presentations, and they remain confident in their ability to deliver over 60+% non-GAAP gross margins over time. So something that I believe is also kind of giving some fear to investors, but something I don't think they should truly worry about. Then I just want to say things to note. A few things. Numerous analysts have decreased price targets on 10/28, so today, due to the guidance miss on adjusted loss. So not only is Q4 outlook looking a bit weaker than normal, the adjusted earnings that they gave, or the expected adjusted loss, is a little bit wider than analysts expected. And we also did see today numerous analysts came out, and here we can see price target cut to 420 from 445, another one from 450 to 450 from 525, another one to 390 from 450, another one to 400 from 460, another one to 375 from 430, and another one from 360 from 450. So we can see overall analysts are a bit bearish. This kind of bearish trend just continues to add a little bit more fear, in my opinion, to investors. So now the final things to know. What else do we have here? So I want to say, for me, this was a bit of I do believe it's a bit of an overreaction. Even though organic revenue is growing a little bit slower, it's due to the traffic last time. Non-GAAP gross margins are also decreasing, but again, due to acquisition cost. And at the end of the day, strong revenue growth, increase in monthly in active customers as well. And to me, I didn't see anything that would really scare me at the moment. So now I just want to share my overall thoughts. For me, Twilio is more of a tier 2 company. And I mentioned a little bit of my tiers. And if you guys want to see this actual presentation, make sure to sign up to my newsletter. I will be posting something like this every Friday or during the weekends, where I just give a quick update of all the stocks that I've looked at and any quick updates. So Twilio, for me, tier 2 right now. I do own it in my portfolio, and at the current prices where it's at, this is sometimes my buying process is more of dollar cost averaging. Here's where I would do heavy dollar cost averaging on it. And if we take a quick look at the overall technicals, right, we can see this is definitely sitting at a strong support for Twilio. I really like it at these prices. This is, if I had money, if I wanted to add into this market, right now is when I would do a nice amount of dollar cost averaging and building up my position. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.